The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Welcome to the Money Masters Show, folks. I'm your host, Steve Rhodes. Thanks so much for joining me. It is Tuesday, January 15th. Hope everybody had a great evening out there. And let's make sure we start off with a great Tuesday. Let's go take a look at these markets here right now. The Dow is trading off about 32 points. S&P down 5. Composites off 20. Small caps off a couple of points. New York Stock Exchange, that is where we are going to start. Trading down 26 points right now, actually outside of the NDX 100, which is being led down by Apple. The index is off 0.8%, down 21 points. The New York Stock Exchange is the number 2 in the clubhouse. I take that back. The composite, obviously, and then the New York Stock Exchange. Regardless, we're going to start with the New York Stock Exchange. What I do have on my screen here is the weekly chart. If you are listening in on the radio or your mobile device, thanks so much for doing that, or one of the radio stations that picks up these shows. You can always catch the live version of this to take a look at the charts on Tiger TV. Just go to the homepage of TFNN.com, and you can watch this show. It's streaming live. You can watch it live on your smartphone devices out there. It doesn't have to be a phone. Your smart devices out there. At the homepage of TFNN.com, on the right-hand side, you'll see the smart device area. Click on that, and this show will start streaming live. You'll be able to take a look at these charts, and you'll see the 3 drive to a top pattern here that the New York Stock Exchange has formed on the weekly chart. That is the shaded in blue area. You see 2 1.272 expansions. Drives just simply meaning a 3 drive to a top, meaning it's, made 3 separate moves to the top out here. The first one that I'm going to start with, or the swing point, is the week of May the 4th, 2012. That high, 82.1165. The second drive coming in here on September the 14th. That is up at the 85.15 level. And today, or yesterday, I should say, you had the New York Stock Exchange get up to 87.2189. Now, not a forced pattern at all. You can see the 1.272 expansions. If we take, so that is the price type of or Fibonacci expansion that you like to see between swing points on a 3 drive. If we take a look at time, so we both have time and price. I'm going to use this little tool here, and it shows you that price here coming in just maybe 1 week early. Perfect, and we don't really look for perfection because we know that's the lowest standard out there because it just simply can't be attained. So this is an incredibly extraordinary, on a weekly chart, 3 drive to a top pattern. Now, not only is it truly a 3 drive to a top, and it might be a 3 drive to a top, doesn't mean it has to be up at the highs necessarily, but it is nicer when it is. And you also like to see these patterns going against other areas out here. And specifically now, let's go take a look at the swing point high out here, which is, now pull this chart back, the May of 2011, actually the week of May 6, 2011. That high is 87.18. You'll see as I draw this black line across the screen here, we did have the New York Stock Exchange yesterday get up to a high of 87.21 and change. So it got up over it. It's trading right now at 88.93. Is that right? Let me make sure here. 88.93. And that 87.18 is the area where it needs to get back inside in order to get back inside the range. So you got everything that it needs with regard to identifying a reversal pattern. Now, here's the beauty of it. This pattern fails. If it fails, it is very bullish out here because this should be a reversal pattern. It's already started just slightly. If we go down and take a look at let me pull this back here first. You can see this is the rising price channel out here that began back in March of 2009. You can see how this area here has held. Only once was it really pierced during the week, and that was where you had a close below it on June 1st, 2012. Had a little bullish engulfing candle the very following week. Got right back inside that rising price channel. You can see that the November lows here, November 16th lows, are where they came back and they touched the low of that area. And obviously the market has continued to move up there. So the New York Stock Exchange, which is key to be paying attention to and looking at, having a 3 drive to a top pattern and also coming in at a resistance area, which is the May 2011 highs out there. That's the weekly chart. If we take a look at the daily chart, not really a reversal signal here just yet, but it is something that you want to be paying attention to. Trade out at 86.93. Moved down this morning, but it is clawing its way back. That is on your New York Stock Exchange. Let's go take a look at the other indexes. Let's go take a look at the S&P cash. We know the S&P cash being 2 points away from getting over the September 14th area. September 14th high is 1474. Right now you're trading at 1466. Today's candle, stitched with the prior two, maybe beginning to give you a bearish reversal signal, but it's still early in the trading session out here. We'll go take a look at the futures contract, actually take a look at the patterns that are set up here. Now, the S&P cash has not tagged the September 14th high. However, the S&P, the ES Mini, in fact, has. The ES Mini, September 14th high, 1468. Actually, you got to close above it on January 10th. Out at, in fact, closed at 1470, and then the following sessions, and since then has rejected that area and moved back inside the range out there. So the futures has absolutely tested that area, whereas the cash index has not. Let's go back to the index. I like to do all the indexes here when we kick off the Money Masters show. So let's go. We took a look at the New York Stock Exchange, S&P. Let's go take a look at the NASDAQ. This is going to be the key chart to be watching today. Why? Because it has moved down into the area that has proven to be strong support. That is the gap up of January 2nd, and this is the only index that has tested this area now 3 times. Tested 3 days in a row. As it tried to break down. That was on January 4th, January 7th, and January 8th. Today is the next day that it's tested, so 4 days out here. The low is 27.1630. It's traded 27.1610 right now. A close back above 27.1630 says it's not ready to bust things down, and if you can't bust it down, what will it do? It'll move up to the highs out here. Of course, the highs have been kept in lockstep, and the highs really being right around the 27.47 level, and that is on the NDX. So this is one of the stock charts that you're going to want to be paying attention to, certainly during the day, but most importantly at the close when Tom begins his show from 4 to 6 tonight. Let's go take a look at the Russell 2000 index, see what the Russell is doing out here. Give me a moment here to pull this up on the screen. The Russell still trading inside or up above the breakout session from January the 2nd out here. That area is really the area of kind of a resistance or support zone. I suppose that's the best way to be able to look at it. The Russell 2000 here, as long as the Russell 2000 stays above the September 14th swing point, that would be bullish. If it gets back below 868.50, then it's back inside the lower range. Says that, in fact, it would have been a false break to the top side. But thus far, it has not given you that signal. Let's go take a look at, what have we not looked at? The Dow. Did we look at the Dow? We didn't look at the Dow. So let's go take a look at the Dow. Where is it on my screen? Oh, it's gone. We've got to go ahead and put the Dow back up here. So let's do that here. Give me 1 second here. INDU is the, I guess I have to spell, or it's just these fat fingers here that I've got. So let's try that one more time. INDU. Maybe a little too much information there. So we take a look at the Dow, trading out at 13,489. So the Dow here trying to get up. Well, if we take a look at the September, the actual Dow swing point happens to be October the 5th out there. The low of that is 13,568. But no reason for us to not go pay attention to the actual September 14th area as we looked at on the ES and the S&P cash out there. The low there is actually 13,533, but still has not been able to get up to that level. Let's go now take a look at the ES Mini 30-minute chart out there. For those of you that don't tune in to the 9 o'clock show, I do kick things off for TFNN each morning at 9 o'clock. And at 9 o'clock, we really take a look at the futures contracts to see what patterns are being set up before the cash starts trading out here. What we took a look at, let me go ahead and get rid of a couple things here on the screen, make it a little bit easier for you to be paying attention to. We were looking at the A to B equals CD pattern. That was completing. This is coming off of the swing point high from 5 a.m. yesterday morning out at the 1470.75 level. That was your A point. Your B point was down at 10:30 yesterday morning at 1460.25. Makes a retracement. Let's go take a look at that retracement here. Most likely 0.618. Oh, how about that? And that's why you want to make sure you're using the Fibonacci retracements and expansions. The 0.618 retracement looks like is about 1466 out here. Actually, you have the ES Mini at 2:30 yesterday get up to 1467, and as it does that, it makes a shooting star candle. So it gets the sweet 618, makes a shooting star candle, and then begins its move down. Now, the one-to-one completed at this morning here at 8:30, that price, and it did it right to the penny, 1465.50. That was at 8:30, and then on the 9 o'clock session, you form a bullish engulfing candle, get some follow through here, and now what we've got is we've got the ES Mini trading on the 30-minute chart, trading back into the 530 swing point. Of course, it's doing it with volume, but that would be to expect it with regard to a lack of volume at 5:30 in the morning out here. The key here is watching to see whether or not the ES Mini here travels up and gets above 1464. If not, then what you're starting to see out here may be a series of lower highs out here. However, if it gets back above it, then, all bets are off. If we take a look at normal retracement levels of an A to B equals CD pattern, actually what it actually formed out here, I'll go ahead and draw that in for you. Let's take a look at some different retracement levels. Let's take a look at the retracement level coming off of this swing point low here at 11:30 in the morning on January 8th, all the way up to the high, and you'll see that that basically is also a 0.618 retracement. So we did have was we had a Gartley buy pattern being formed. I'll go ahead and draw that in a colorful kind of shape for you. So you can see what that looks like out here. There's your 0.618 Gartley buy pattern that actually set up. And what is a normal? Let me go ahead and get rid of the formation tool out here. What is a normal retracement of a Gartley pattern? Well, the first area is going to be the 0.382 retracement of that entire move down, meaning your A to D leg. If we take a look at what that is, we're going to go from the swing point high at 2200 hours out at the 1471 level last evening. You will see that the 0.382 level is what it has hit thus far during its retracement. That is the 1462 range. Normally, what you will get out of a Gartley pattern, in this case here, a Gartley buy pattern, would be moved to the 1465 level. Of course, that would go ahead and say, well, I don't know if we're going to see a series of lower highs out here, but so far what it has done is exactly what it's supposed to do, which is bounce up to the 0.382 of that A to D leg, and that is the 30-minute chart that we're looking at. Apple, no reason for us not to speak about Apple out here. Let me go over to the Apple chart. You've got Apple down $10. Apple coming into its really last area of support out here, which is into that February 15th, February 16th combination of candles out here. Apple at 491.05. We come back, we'll take a look at Apple and anything else you'd like. Give us a call, 877-927-6648. AutoZone on the way up $6 and change. And Intuitive Surgical, again, having brain salad surgery, down $9 and change. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, and let's go back to Apple and see what patterns, what expansions, what contractions that we've got going on inside this equity. Now, what we do know is Apple closed below the hammer candle. That hammer candle from November 16th, that was your reversal signal here in Apple. When you close below a hammer candle, that is very bearish out here. Apple, of course, does have some support that it is trading into. That's this high volume session here from February the 15th out there. And you take a look at the high of that session is 514.26, traded just slightly lower to set up the actual swing point on February 16th, and that's at the 486.63 level. So that is really your last bastion of support inside Apple. If we take a look at what it is doing or what's holding it, it has made a 1.272 expansion of its last set of swing points. Let's take a look at that. That is the swing point of the bullish engulfing candle from December 17th. That low was 501.23, all the way up to the high that was put in on January 2nd. Let me just expand this chart a bit here. Let me open it up. Let me actually get rid of some lines. Might be easier for you to actually see out here. So we'll take a look at that. And you can see that the, well, maybe you can't see. Let me do it again here. Get rid of that line. There we go. Now you can see, hopefully you can see the 1.272 expansion. That level really coming in at about 486.80 so far today in the intra-session, getting down to a level of 488.27, so close enough for my work. So you got a 1.272 expansion of its last set of swing points coming in, not a 3 drive, to a bottom or anything out here because you don't have an expansion off of the hammer candle. That would be a 1.272 expansion out there. So that is not a three-drive pattern, which is different than what we took a look at in the New York Stock Exchange on the weekly chart out here. What we also have is you've got a 0.618 retracement, I believe, off of this swing point low out here. Let's go take a look at that. And that is the low coming off of the June 20th, 2011 time frame. So if we go from that low, where is it? All the way up to the high. No, it's not that low that I wanted to grab, is it? Where did I want to grab? Right in about, is it about right here? I suppose it was the November 25th. There we go. November 25th, 2011. We know that the markets made a substantial low then. So if we go from that low, there we go, that low all the way up to the high in Apple, you can see it's trading also at the 0.618 retracement level. So just grabbing some key swing points in this case here in Apple where it really began its last move up off of November 25th all the way up to the highs put in when it got into that 700 range. So you can see it's got a 1.272 expansion of a set of swing points. It's got a sweet 618. It has broken the hammer candle. Says that if Apple does not hold this area, that the next normal level for it to travel to is going to be the $435 level, trading at $491 right now. Why that level? A couple of reasons. Number one, you've got the 0.786 retracement. Number two, you've got an open window, an untested open gap out there. Gaps get filled. In this case here, Apple would come down and fill that gap. The top of the gap is January 24th, and that is at the 425.10 level out there. And that is what Apple wants to do. It's just going to now be a matter of time. It has broken some significant support areas out here, and so that is on Apple. Let's go take a look at some stocks here that are popping and dropping. So AutoZone is the leader in the clubhouse. Let's see what is behind this move here. If there's no earnings releases, AutoZone AZO is the ticker symbol, up 2%, up $7 and change. So let's go see what that is trading into. Most likely a downdraft somewhere, because AutoZone has had some problems, or maybe this thing is kind of consolidating. There we go. So let's take a look at AutoZone having a strong candle session here today. Let's get rid of the trend line out here. Give me a moment here, clean up the chart. And so AutoZone, I haven't really looked. Let me put this on a weekly chart here first. I'm going to start with the longer term time frame, see what it is that I can see out here on AutoZone. Not a lot here. Really just been consolidating sideways, but lower to sideways. You know, this thing had some pretty good volume come out of it on December the 7th. The week of December 7th, 3.7 million shares out here. Last time this thing has any volume on this is all the way down at the 273 range. That goes back to January 7th, 2011. Let's take a look at it and come back now to the daily chart on this equity, see if it's taking out some swing points. So it does have a set of swing points that it has taken out here. Most recently would be the swing point from December 27th. Let's see if it did it take that out. No, that area held as support. Looks like I'm going to need a little more time taking a look at this AutoZone stock chart out here. 877-927-6648. You've got Express Inc. up 19% this morning. Ocean Engineering up 4%. Intuitive Surgical down $10 and change. Google off $8. Regeneron Pharmaceuticals off 5. Lululemon down 5 as well. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 37 points right now. S&P's off 5. And on my screen here, I've got that GE Dow correlation chart out here. You know, probably one of the largest divergent patterns that are that inside these two charts. And folks, this is taking a look at, if you're watching us on Tiger TV, the upper portion of the chart is the chart of General Electric out here. General Electric being, I think, 27, 28, or 29. I'm going to have to look that up, or maybe somebody in the den will look that up for me. I believe it is somewhere between 27 and 29th as far as the weighting inside the Dow Jones out here. And so it will not lead the market up or lead the market down, but it is a really great advance warning. I suppose it is because of all the tentacles that they have out there in all the different businesses and industries. What I do know is that when GE and the Dow become unglued from a correlation standpoint, that it often leads to large corrections in the marketplace. We take a look at GE off of the top, off of the highs here, most recent swing point high right around the December 17th time frame. You can see how it has traded in a downward angle out here versus if you take a look at the Dow has been making higher highs out here, and the GE has been making lower highs out there. and that portends a significant retracement in our future. The question is when, and you've got to, the answer as far as when is going to be when you start to see some bearish reversal candles, and I think it's when you're going to see it both in the, really I'd say from the strength. Probably the next biggest move in Apple comes as a result of the strength showing their hands weakening, and then that will just simply crack Apple and turn that into a real applesauce factory out there as it makes its next 200-point move to the downside. But GE and the Dow, just simply, it is like a big gramophone, big phone, somebody yelling at you, screaming at you to beware out there. This is a correlation that has worked really, really well. Let's go take a look at some of the sectors inside the S&P 500. Let's go take a look at the strong hands. Let's go look at the XLF trading right now at 1703. Not really giving us much in the way of a reversal signal, so to speak here. Volume-wise, yesterday, 38 million shares closed outside of the swing point from January 10th. That had 61 million shares up at the top, but no real reversal signal here. You'll see a real reversal if this moves back below the January 2nd level. Still has not even really tested the January 2nd high today. That would be $16.88. It's got down to a low of $16.95. So no real weakness that we can see here in the XLF, at least on the ETF side. If we take a look at the energy sector, that would be the XLE, also traveling up towards its highs here, traveling inside January 4th's candle out here. So no real weakness here inside the energy sector as well. So that not giving us any kind of reversal signal. Let's look at the technology sector. Of course, the technology sector, that certainly is giving us a reversal signal, but that's just simply because of the weighting structure of Apple inside there. Looks like the XLK will come down and test the swing point high from December 31st. That is 28.97. It's trading at 29.11 right now. Volume down there is 15 million shares. Thus far today, 2.7 million shares in a little over an hour of trading. So it does have the volume as it's coming back into that December 31st area, assuming that volume can maintain the same levels as the last hour, which we know that is not the case, or that is typically not the case out there. If we take a look at the ETFs, let's see what kind of volume we've got during the first hour of trading. And this is going to really be the key here for you to pay attention to. That is the Qs, that is the low of 66.46. Qs at 66.43 right now. A close back above 66.48, I should say, 66.48. That is the low of January 2nd, and a test of that on less than 70 million shares. Not ready to bust it down. That's what it will be telling you, and you'll likely see the Qs make another move up to the January 11th high, up into the 67.29-ish area. In volume-wise here, you've got 9 million shares. That 9 million shares going against 70 million shares. So it is even light, quite frankly. So volume light on the Qs, which are the weak hands out here. If I just simply take the, if I just simply go ahead and multiply times 6, 8 times 6 is 48 million going against 70. Not even if I use 9 million. 9 times 6, what is that, 63? So 63 million going against 70, and it's not going to maintain that same volume out there. So you don't seem to have the volume today to bust it down. 9 times 6, 54. Thanks. Appreciate that. It's a good thing I've got some good guys in the foxhole with me covering my flanks. So, yeah, so just not enough volume out there. Al is quick on that calculator mind. Thank you, Al, for that. We go take a look at the diamonds and see what we've got volume-wise in the diamonds. It is the about 800,000 shares today. Of course, that not even getting down to the January 2nd level. That's got 9 million shares. Still not enough volume to even move to the downside on the Dow Diamonds out there. The Dow Diamonds struggling, though, inside the downdraft day from October 19th that has 10 million shares to the downside. So it does not look like we have any volume accelerating to the downside out here. So we'll go take a look at some intraday trading options for you. You did have the SPYs testing again the September 14th swing point, trading below it. First time it's traded below it in the last 4 trading sessions. That has 169 million shares. You were inside there yesterday with only 90 You had 113 the day before, and then on Friday, 130 million shares. So not enough to bust it up. So far, the volume-wise today, 25 million shares. That says about 130 or so in the volume-wise in the SPYs today. Did we cover everything? We do the SPYs. We did the diamonds. We certainly did. I think we did. I think we did everything. Let's go take a look at where our signals are likely going to come from. It's going to be the currency market out here. So let's take it'll be one of the places where we'll see it happen. The currency market that you want to be paying attention to, the currency pair, I should say, is the cross rate of the euro, Japanese yen. That's what we're looking at. We're looking at a 30-minute chart here. That started to trade off today. Of course, that got into the oversold conditions, overbought conditions, I should say, back at about the 2,300-hour mark of January 13th. Out here, so that was Sunday evening. If we take a look at just simply coming off its most recent swing point low, that would be the session time frame of about 6 in the evening on January 8th out there, when that cross pair traded down in the 113.50-ish range, goes from that low all the way up to the high when it got into that overbought condition, I should say, out at the price range of about 120, a 0.382 retracement on that. Would take you down to 117.59. It got down to 117.64 today, so it's worked. And as it got down there, it got down into the oversold territory. Went ahead, gave you a little bullish engulfing candle coming into the 8 a.m. Session. A little bit of follow through. Now we are starting to see in this case here still. We are starting to see some lower highs out here, and we'll see if we continue to see lower lows. Here's where you'll probably get your signal as to an imminent reversal out here. This is the 30-minute chart. If we do take a look at the daily chart, you'll see nothing but really strength out here coming off of the lows from November 14th. So we know our lows were November. So if you just take a look at the reversal signals out here, and I'll put this in place for you. Our markets were moving down into November 16th. We know that is the low out here. And if you take a look at the euro, Japanese yen, you didn't see a bullish sign out here. You saw that first bullish sign on November 14th. Now remember, our markets made its low on November 16th. So you get a bullish reversal sign. Let me, I don't know if I can do this on the day. Let me see here if I can put that in. Yeah, I can't put that in there. You can see it also is moving down into the oversold condition. Let me try to move this down there. Just make this chart a little bit easier to look at. There we go. What you are looking at on the screen here is you're looking at in the center section here, the black line is the correlation of the S&P. This is the S&P 500 on the line chart. You've got the candle charts up here in the euro, Japanese yen. It really correlates well with regard to price movement inside our S&P. It comes unglued every now and then, but it's a really great way to correlate what's going on inside the currency market and our markets out here. So picture the S&P, moving down off of the highs back in September all the way down, in essence, to the November 16th lows out here. The euro Japanese yen gave you a reversal signal on November 14th. So it gave you a reversal signal, a couple trading sessions early. In fact, you had some follow through on the trading session of November 15th out here. So something to think about. Now, if you take a look at the move off of the November 13th level in the euro Japanese yen currency pair, you did get a bearish engulfing candle on December the 6th out here. We know we had a small correction in our marketplace as well. Lasted for a couple of days out here, and then you don't see any other bears show up inside the euro until December 21st. They didn't last even a full day, not even enough to blow out any candles out here. Next time you see any bears show up, they show up on January 3rd, and on January 4th, they erase that as well. The same thing here. It has a sideways move, so it's really going to be from this currency pair that also has follow-through. So a follow-through is not one single trading session. We are getting a bearish engulfing candle today, so it's going to be tomorrow when we come back on the air. That's if it completes like this here, where we'll want to pay attention to the euro Japanese yen currency pair. I believe this right here, this is the where we're going to get that reversal signal, and it is going to come from the currency marketplace. Then we'll see the other reversal candles inside the other indexes. Of course, we'll see them in the futures marketplaces first. And if we do take a look look at the daily futures marketplace out here, and this is the ES Mini. Still, even though you've got a trade out at 1461, not really much even with regard to a 3-day stitched candle out there. We do have reversal signals coming from the NASDAQ. Of course, you would expect that. Not in the Russell 2000. And, just a slight bearish engulfing candle so far today in the Dow Jones. But you're talking about some pretty darn small bodies. The Dow yesterday making a doji in the Dow futures out here. So it doesn't take much to make a bearish engulfing candle inside that with these small. Now, the small bodies absolutely are communicating to you that, it's losing energy. It's losing steam to the upside. You don't expect that. Man, when you see a breakout, when I say, man, you see a breakout, what kind of grammar is that? When you see a breakout in the marketplace, you expect to see follow through. You really should see follow through, and we're certainly not seeing that in the way of bulls and bears with regard to candle formation out there. You're seeing a tired marketplace that looks to me like it is getting ready to turn out there. Let's go take a look at some equities here. Intuitive Surgical, I mentioned that they were the second right behind Apple. They're down $9 and change. So let's go take a look at that stock chart and see what it is doing. ISRG is the ticker symbol there, ISRG. Intuitive Surgical moving down into an area where it really performed some surgery here on the way down with expanded volume. Of course, Intuitive Surgical right now coming into its last downdraft, and that is from December 19th out there, 2.4 million shares to the downside. The bottom of that trading session low is 508.08. It's at 503.65 right now. Intuitive Surgical right now is really just consolidating. It came down with volume. It should have been enough volume to have busted the session from July 23rd out there at the 467 mark. It did not bust through there. Couldn't bust it down. Looks like this thing is really just going to be consolidating sideways, but this thing has had institutional selling. It had institutional selling here on the 20th of July. Had some big institutional selling on both the 19th and the 20th, and quite frankly, the 30th of December out here. So Intuitive Surgical will be back at its lows, and it's just building some energy to take out a B point of an A to B equals CD down. That low is 470. That's your B point on July 24th out there. That's on Intuitive Surgical. Let's go back and take a look at Lululemon. We haven't taken a look at that here during this show. We looked at it and during the Trader's Edge show out there. Lululemon down with volume today. We can see that that is trading into an area where we most recently saw the bulls hanging out. So they are trying to support it as much as they can. The bulls were hanging out here where it most recently broke out. The actual breakout session-wide price spread accelerated volume was on September the 7th out here, coming back into the breakout area, which happens to be really the August 31st candle, coming into that level with volume, as I said, trying to break through that area. But you do have this black horizontal line out here, and I would say your real area for where this thing would break loose to the downside would be a close below $65.09. That has 1.4 million shares at that most recent swing point, gapping down this morning, already doing 5 million shares. And that 5 million shares only been trading for an hour now and 20 minutes. 5 million shares going against 17 million shares. Looks like we've got some major institutional selling going on inside this equity. Let's see, what else do we have moving to the marketplace? We come back from this break here. We'll go take a look at Genesco, up about 7% this morning. You've got Oceaneering Inc. up 4%. Viro Pharma, VPHM, up 7% as well. You've got Given Imaging. We'll go take a look at that. That is trading down 12%. And Multi Fine Line Electric. Be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 26, S&P's down 13, composite, though, down 18 points, off about 0.6%. Apple down $12 right now. And as we take a look at it, this thing, as I was looking at the intraday chart here, just simply the 5-minute chart, which is, going to give you some pretty good indications of overbought, oversold. You can see a lot of selling pressure inside Apple, even though it moved down very quickly into the oversold territory. Out here, you can see not being able to bounce really whatsoever out here. That is not good news for Apple. Of course, you've got all kinds of technical houses, all kinds of technical traders out there certainly realize that Apple has broken that hammer candle. And when you break a hammer, you close below a hammer. If you're long, you're wrong out there. You want to wait for the Bulls to show up and maybe draft them. Yes, we do know that Apple is up against a 0.618 retracement off of the November 25th swing point low in 2011. Has made a 1.272 expansion, but those fib numbers don't look like they are going to be good enough to hold Apple in place here. Apple is beginning its way down to that 200-point A to B equals CD, and the reality is it is on its way down to a much lower low than that. The 200-point move takes you to 395, but the reality is Apple wants to get into about the 340 mark. It wants to come all the way back at least to the October 5th swing point, that low, 360.30. That is where Apple certainly was fairly valued when Steve Jobs was with us. And at least if you believe that Apple was fairly valued when he was alive, that is that in essence, October the 5th out there. That's the number that I gave you. That was the day that Steve Jobs passed away out there, and that range was 360 to 379 out there. So Apple on its way back to that level out here. As we go into the close, let's take a look at a couple other stocks here that are moving. Let's take a look at Given, GIVN. Is that the, where did it run to? Yeah, GIVN, Given Imaging, off 12% here this morning. Let's see, the news behind this is that it looks like they were exploring a merger transaction, so that deal, whatever that deal was, is off the table here. This creating a island reversal to the downside with volume. Now, this is not a very liquid equity. It's trading at 1592 right now. 45 looks like about 25 to 45,000 shares per day is what it does. But take a look at this island top that it has created out here. This is an island, had a nice sign of strength that must have been on the merger news out here, maybe perhaps a little bit like Dell. We'll go take a look at Dell here as soon as we're done with this equity. This gapped up on October 18th with 1.1 million shares, back down below that gap, creating that island out there. So that island was created from October 18th to yesterday, January 14th. So quite an island out there. Down this morning with 890,000 shares. This equity will travel all the way back to this high volume low, which is in the $12 range. I said we were going to go take a look at, what did I say here? What was it that I said we were going to go look at? A little brain contusion there. Oh, well. Let's just finish off the show. Going back, let's take a look at gold and silver here real quickly. Gold, trying to break out here. It's above this most recent swing point, trying to get up into the 1695 level, trading at 1681. What's going to hold gold in check here next will be the 50-day exponential moving average at 1689. Stay tuned, folks. Basil Chapman will be up next. And then as we do on Tuesdays, each Tuesday from 12 to 1, Victor Jones for the option hour, Daryl Martin from 1 to 2, David White 2 to 3. The Ken Shreve will be with us from 3 to 4. I believe Ken has a workshop coming up on Wednesday, coming up tomorrow. If you're still interested in that, you can sign up today for it. Sign up for his newsletter service. The workshop comes with that. And then we've got the Tom O'Brien Show from 4 to 6. Have a great Tuesday. Look forward to seeing you in the morning, folks.